welcome to Crypto TV presented by CoinSwitch Kuber. Numbers of crypto investors are swelling day by day, not just in India, but across the world, and breaking records when it comes to sums invested. While the crypto ecosystem celebrates this success, it comes at a price. Calls to rein in the industry, regulate it, are at a fever pitch. Critics say the industry is operating in a rule-free environment, a Wild West kind of atmosphere where most ordinary investors have gotten caught up in the hype and they don't fully understand the risks that they're taking. While the evangelists claim regulators do not really understand crypto, and to treat it like historical financial products or its underlying technology as just some other platform is a big mistake. They say crypto can pave the way for financial inclusion and a more equal playing field. The real challenge then is how to ensure inclusion while managing the risks. I'm Maloni Bhatt, and today I'm pleased to welcome to our show Rameesh Kailasam, who is the President and CEO of IndiaTech.org. IndiaTech is an industry association representing India's technology startups, unicorns, and investors. Rameesh Kailasam has over 20 years of experience in building partnerships between businesses and governments, working in public policy, advocacy, strategy, and management. Sir, thanks very much for being here.
Thank you for having me today.
So I'm going to read out something which is from an IMF blog post. And it says, and I quote, "Crypto's cross-sector and cross-border remit limit the effectiveness of national approaches. Countries are taking very different strategies, and existing laws and regulations may not allow for national approaches that comprehensively cover all elements of these assets. Importantly, many crypto service providers operate across borders, making the task for supervision enforcement more difficult. Uncoordinated regulatory measures may facilitate and potentially destabilize capital flows." Now, this is from an IMF blog. The IMF is effectively saying that crypto regulation cannot be in silos. Every country is grappling with regulations. So how can we make it work for all, if at all?
Well, that's an interesting point that IMF made, but at the same time, I think the answer lies in the question itself that IMF has put across. So if you look at crypto conceptually, doesn't believe in borders. It is meant to seamlessly transgress borders. And the purpose of it was largely to be an alternative to the currency which are controlled by countries and central banks. But having said that, countries have moved along. The perceptions have changed. It is no longer looked at as a currency threat, nor is it looked at as an alternative to currency, but it has evolved into an asset class. It has evolved into something which is a digital asset. It has evolved into something which is similar to gold, equivalent. I mean, you don't buy and sell stuff using gold in the market these days, but I mean, gold is used to convert into cash, and then the cash is getting used. So interestingly, crypto is moving into a sphere where a large chunk of population would begin to say, I'm holding crypto as an asset. I'm holding crypto as the new gold of this next gen. I mean, the next gen of the millennials and so on are largely would prefer to have a crypto than a gold. I mean, that's the perceptual change. Generations before gave value to gold. Now I have a huge Twitter thread where I've written about gold itself in comparison to crypto, where I've said that, I mean, there is a finite amount of gold. Gold is not infinite. Gold is not even from Earth's atmosphere. In fact, it comes from outer space and has got collected over time. You exactly know how much of gold you have and you can ring fence it. But at the same time, crypto is equally finite. And therefore, there are a lot of similarities and a lot of differences. So to IMF's point, yes, the core of it was meant to be transgressing borders, hence was perceived to be difficult for any particular country to rein in. But we all live in a bordered world. We all elect our governments. We all live in societies which are, I mean, governed by borders. So how would you put a regulatory mechanism within your border? And how would you kind of tie it down to the extent that it is for investor protection? It doesn't con people. I mean, you have 10,000 plus coins today, but I mean, on the exchanges in India, you might find some 75 to 150. I mean, that's the range that goes across exchanges, which means that there's a filtration process which has decided what is for good and bad and what is not for good for the investors. And therefore, from that perspective, there is a potential to govern it in individual countries, and there is also a need for a mechanism across countries to govern it and control it. And if you look at the Prime Minister's statement, he has also spoken in the same breath to say that democracy should come together and align and regulate and control cryptos in a manner. I mean, he was, in as many words, he was meaning that, but he was calling for a larger cooperation amongst democratic countries. You also have the FATF, which keeps coming with guidances on how to regulate crypto, and countries are taking measures to follow some of those. I mean, you have countries like Japan, South Korea, and a host of other countries who are talking about FATF guidances being issued with regard to cryptocurrency and so on. So which means that countries are looking for a mechanism to govern. Countries are looking for, one, an inward mechanism, and two, an outward cooperative mechanism. And therefore, to that point, what you've quoted IMF as saying is partly true, and partly there is a lot of evolution post that statement, which is parallelly happening outside in the ecosystem.
But do you see this cooperation actually being set out and being something that countries will work together at, or do you see it as a fragmented and a fractured approach?
Well, the fact that it has got into the dialogue of nations beginning to now mention, and you have prime ministers now speaking about it, your president speaking about it, I mean, across the kind of globe, is kind of evidence to the fact that it has entered the dialogue. But at the same time, no country has come with a foolproof system, but each of them have come with something good. So if you ask the regulatory community, somebody would say, hey, Singapore is doing good here, probably US is doing something better there, Canada is looking at something different, and so on. So therefore, and India is also now evolving as we speak towards a potential regulation. So which means that it will be a crowdsourcing effort, I would say, to reach that point where each country would say, we do this. The European Union is coming with its own set of regulations. So there will be a point where all countries converge and may decide saying, okay, these are the best practices, let's share it. Let's cherry pick each one of those and come with a collaborative mechanism. But have we gone there yet? We are not, but at least there are baby steps being taken in that direction, which is positive.
Right, let's hope they go. Your organization, indiatech.org, put out a crypto white paper, and you said then it was to educate the government on the industry. Now, while there's no clarity on the bill that the government wants to come out with, but from the tidbits that we've had in the press, do you think much of what you said could be onboarded or has been onboarded, broadly speaking? And I think optimistic.
Yeah, we had written that white paper. It was a 5-page white paper, largely addressing issues of concern which government had. Yeah. It was not meant to tom and say, hey, the cryptocurrency is great. This is the size of the industry. And therefore, I mean, we did release one paper that way, but what was meant for government consumption and what we pushed for as a white paper largely was around the fact that we needed to have a kind of a mechanism which could address all the concerns that governments had, primarily around to say, hey, we have an insecurity of calling it a currency, so call it an asset. We do not know how to tax it, so we gave the different forms of taxation. There was an issue around the same thing that IMF has raised around borders. So we said, allow Indian exchanges which are domiciled in India and founded by Indian founders. We also put across thresholds on what the FDI limit should be for such exchanges, similar to how the banking sector operates, because we have entrusted our cash with the FDI limits up to 74%. So therefore, there was a series of set of recommendations that we had brought about, including disclosures and so on. The purpose was to give comfort to the government to say there is a way in which you can actually tackle all the insecurities that you have and issues that are genuinely raised by regulators and government. But at the same time, you could do it within the existing regulations. There was actually no need to actually go for a bill. We may need a bill tomorrow, but there was a mechanism available where in your existing regulations, you could tweak and regulate it. But for that, the fundamental starting point would be a one-point statement to say that we are calling it an asset class. And therefore, then the rest of the regulations will begin to fall in, right from how do you tax an asset, how do you value an asset, how do you disclose an asset, to how do you allow what kind of money to be spent on acquiring the asset, how much of foreign exchange exposure you could have, and all of that.
Okay. If regulated smartly, do you think that crypto has the potential to create greater financial inclusion in India, especially because our country, not everyone has access to banking services. There are a number of gatekeepers. Is it something that we should be even considering at this stage? Of course, we have a digital divide.
Yeah, we do have a digital divide, but I think over the last few years, we have seen increase in access to digital payments. I mean, you've seen different forms of digital payments coming over, apart from, of course, the banking system, which has gone all out. You had the Jan Dhan programs and so on, that increased the amount of accounts getting opened. Earlier, we didn't even have that. Subsequently, post the wallet systems coming in and post the UPI opening up, today you have right from a street vendor to everyone transacting on a digital payment platform. And therefore, as a country, I think we are fairly progressing fast on the digital payments ecosystem, and therefore moving towards a less cash economy. I mean, people are more comfortable taking payments on mobile today in local shops than saying, give me a currency. So therefore, that's a marked shift. So therefore, will a country like India have hunger for a crypto as an alternative currency? Certainly no, because we are much better off than most of the countries in that regard. And other countries are now looking at these models. But certainly, yes, if there is a new form of asset which has come in and the world is having a piece of it, Indians should also have access to that piece of it. But at the same time, we are also seeing a lot of interest in crypto in tier 2, tier 3 towns, where people are picking up pieces of it, which means that this has actually captured the imagination of the last mile as well to a great extent. But people are talking about it. Whether they fully understand it or not is a completely different question. And this is where I've been often advocating the fact that industry should now spend more time advertising about what is crypto and what it entails, apart from, of course, enticing people to come on their platform. But it is all equally critical that education is invested upon, because in soon you are actually heading towards maybe an asset class which is equivalent to a financial product. And therefore, people may begin to look at it as an investment class. And all the more reason why do's and don'ts and education and advertising standards have to be brought in quickly. And the industry has to move towards a stricter self-regulatory mechanism till the time regulations kick in.
Right. So currently, the barriers to entry are relatively low. Anybody with a smartphone and an internet connection can get involved in the crypto community. Now, do you think regulations could potentially raise the barriers, to entry, where only the rich holding cryptos like the Bitcoins and the Ethers, they will stand to benefit, and not allow the smaller cryptocurrencies to easily enter into the market?
Well, even today, if you look at even the larger cryptocurrencies that you mentioned, you can acquire bits of it. So the investment value is today as low as 100 rupees in many exchanges, and in some other exchanges, it is below 100 as well. When people put 50 rupees as well to acquire a unit of the larger thing. So when you're talking about Bitcoin, I mean, nobody would own one Bitcoin, but you will have people owning units of it. So therefore, the fractions are available, which is what is making this market affordable and is able to reach the hinterlands and tier 2 and tier 3 towns and cities. So therefore, I would say, in terms of digital divide, or I mean, rather the greater divide around crypto, as you mentioned, well, people who can buy more will be buying more. People who are able to afford less would be taking less. But at the same time, if regulations kick in, I think we might see a barrier on how much max you can invest in a year, because there might be regulations around FEMA, there might be regulations on how much of rupee exposure you can have, there might be regulations on banking system on how much exposure you can have your customers have on crypto. So typically, I would say that would affect the rich more than the poor, because as I said, when any thresholds or limits which are brought in would actually discourage people from going more on crypto. And therefore, I would think otherwise on that.
Right. You brought in the point of the investors, which, have gone to the last mile you mentioned. They're there in smaller towns, in tier two and tier three towns and cities of India. Crypto exchanges say that a lot of young people, not limited to cities, have invested. Now, do you think that this group, this cohort, they are well informed about the risks of crypto, or is it they're investing in it, because there is a FOMO or a fear of missing out?
Well, a lot of people do invest on the FOMO factor, but at the same time, a lot of them are also investing because it's a new thing. Of course, a lot of people need to be educated around it. Today, fortunately, again, the same smartphone and internet that you mentioned is a tool available where you have huge amount of resources available online, on YouTube, on various other platforms, social media platforms, where people can actually browse and see what is available in terms of knowledge around this topic. There are a lot of commentaries which are there. However, how much of them are fully trustworthy is still questionable, but in their own limited sense, these are ways and means in which people are using to get educated. So therefore, I would say that are they using these tools to get educated is still a question mark. But certainly there is on the public domain a lot of literature now available compared to what it was a year ago. And especially, I would say, more Indian literature coming in, because you now have a lot of Indian evangelists, as you pointed out, and a lot of people talking about it and saying what this means and what it entails and what does things even mean. There are podcasts available now online on popular different platforms. Media houses like yours are doing a great job trying to educate. And therefore, I would say that different platforms are doing their bit, which was missing till a year back. Till I would say, I think we could also partly claim some credit, because post the white paper, there has been an increased amount of interest amongst media as well to cover this topic, and more media covers it. I think more and more education it is for all sides, including government, regulators, and investors.
So crypto as an asset is the way the government seems to be going. Now, as an industry body, what do you think of the stand? There was also news that individuals and corporations violating government rules on crypto finance could face fines of up to rupees 20 crore and a jail term of 1.5 years, arrest without warrant. It could be non-bailable. What do you make of it all?
Well, ideally, I think the direction that we had recommended and what we presume the government should also be thinking towards is to accord it an asset status, have the filtration of what coins would be allowed and what would not be, identify the exchanges who will be allowed to operate and what parameters would they qualify to operate, and of course have systems that we had recommended in the white paper, including of course mechanisms around anti-money laundering, CFTs, and of course things like suspicious transaction reporting and so on, which could actually ring fence the whole thing. But having said that, if you look at the direction of thought, I mean, I haven't seen the fine print because there was no fine print that came out, or rather perceived to have come out. So I would not be commenting on something which I've not read, and therefore, I mean, ideally, if they were going in that direction, it was contrary to the discussions that the government and the industry were driving towards in a mutual sense.
So I want to draw your attention to the space of NFT and DeFi, which is decentralized finance. Now, the idea over there is to create decentralized spaces for, maybe small-time artists, gamers, borrowers, without third-party regulations. Do you see laws penetrating into these spaces, and how will this play out?
Well, you have NFTs now. NFTs, I would say, is similar to IPs. I mean, you're creating your own intellectual property. You have laid out intellectual property regulations and so on. But I mean, we are also seeing a surge in parallel. So in addition to crypto, as you pointed out, we are also seeing a huge amount of inclination coming towards NFTs. You have Bollywood stars now, including the likes of Amitabh Bachchan, announcing that they are launching their own artwork as NFT projects and so on. But since India currently doesn't recognize crypto assets in any form, or such art projects, I mean, if you see the product that will come out of these, maybe pictures, videos, music, may still be subject to the Copyright Act, or for that matter, if somebody claims it to be an intellectual property, then other laws relating to artists or creators' intellectual property would be applied here. There are global platforms for NFT which give rewards to the initial copyright holders and so on for successive sale of their works. And on the other hand, I mean, the assignment of the copyright or artwork for hire would transfer all the royalties to the buyer of the copyright and so on. Because I mean, I might be an actor or I might be somebody, but I might not be creating something, but I might be involved in the creation of something, and there might be someone doing it for me. And therefore, unless crypto assets are regulated and recognized, legal rights under existing laws may vary from one party to another, and maybe there might be recourse for dispute resolution and so on. But what I would suggest there is that I think the fundamental thing is we need to recognize the fact that yes, cryptos are asset. And then we also need to recognize that NFTs are potentially something which are copyrights, intellectual properties, and so on. And therefore, based on that, and there might be NFTs coming out in different timelines and different timeframes and different purposes. So it could be also, we might see that there would be cases where you might have different treatments for different types of NFTs that come in as well. We might see all of those. As regards, I mean, similarly, lending platforms, if you look at that, borrowers who use their crypto assets in a platform for lending purposes may invariably be bound by various RBI guidelines and acts, and especially if such, I mean, DeFis or NFTs represent a physical asset as it is classified under, then the principal they're actually staking their crypto assets as security for lending purposes. And the borrowers may receive loans in fiat currency such as INR. So there are master directions issued by RBI for P2P lending and licensing, which will apply here. So digital lending platforms dealing in INR itself without crypto assets, I mean, they have created a lot of concerns in the recent past. And therefore, all the more reason why clarity should start with crypto assets and then move on to this, because I mean, all of these need to be addressed at the same time. But I think there needs to be a fundamental bedrock underlying assumption on which direction of thought and what kind of animal are you and how will we treat you and call you, that has to emerge.
Right, right. So, the government has said that, it will move crypto under the existing regulations when it comes under SEBI or maybe a new set of regulations, do you think regulation will limit innovation, or do you think it will give the industry some kind of discipline to grow?
Well, if you look at regulation, I mean, this is something which I often give in my lectures on public policy, is that when you regulate something, it is like on early stage, it is like saying, okay, you see the frame behind your head is a great example. Now, let's assume that that's the frame I give as a regulator and say, put the art into it. I mean, or put your thoughts into it, you will be restricted to that frame. But if I said that take the whole wall and do your artwork, and then I say, okay, now I put the frame around it, I have given a larger chance for you to innovate and grow. And therefore, the challenge often that you come across in regulation is that do I restrict you in the beginning itself, or do I give you the canvas, and do I build a flexible frame around you that keeps evolving and both of us grow together? And therefore, that's ideal way out. But regulators usually don't have so much of patience and time, and therefore it is important for the industry to give them that patience and time and invest equally. But to your point, yes, I mean, regulation can stifle it, but regulations can also enable it for two reasons. That regulations stifle it if they do not allow a lot of things in the beginning, and therefore it stifles innovation, and you find the rest of the world is innovating. At the same time, you have to innovate responsibly. And in parallel, if I say there are founders who are working in the blockchain ecosystem who come back and say, I'm not sure whether I'll put up my company in India till there is clarity on which direction the thought is, because I might invest everything and they might tell me to shut it down. So should I set it up in Singapore? Should I set it up elsewhere? Or they may turn around and say, till there is clarity, we will operate this way, but the moment clarity comes out, we will be in a better position to give direction to our thought and innovation on which direction things can go. So it's actually a double-edged kind of a thing where on one side it enables, on the other side it can disable as well.
blockchain is decentralized. Now, it's not in the hands of a single entity or organization. It cannot be, instructed on, okay, this is how you function, this is how you grow. Do you see this as being a challenge for the government?
Well, if you look at the crypto currency space, I mean, we had recommended that initially we should start with only those currencies or assets which are on the public ledger and not private. But at the same time, and here is where the differentiation needs to be more clear. If you look at blockchain and crypto, they are interlinked, but they are separate as well. I mean, at least blockchain is separate. And we are hearing cases where state governments are going ahead and experimenting on blockchain technology, on land records, and a range of other issues where their dependencies on third parties reduce and it makes the information more accessible. So therefore, governments are looking at blockchain technology. There is a Niti Aayog paper in detail on blockchain technology. Governments are discussing seriously, both center and states in various departments, on where blockchain can be deployed. But at the same time, if you look at crypto, and this is where I think we need to be careful as an industry when we speak about it. We can't be showcasing saying blockchain and crypto are together because the government would say, okay, blockchain, I can have users beyond crypto as well, and we can demonstrate that. But at the same time, for future evolution and future kind of evolution of innovative ideas and way forward, these have to be going in tandem as well. Otherwise, you may not see the evolution of innovation happening the way it should be. So it is a position where, therefore, ideally, if I'm the government, I would say, okay, let me target crypto assets separately and let me keep blockchain separately. Blockchain we will continue to use. Crypto, we give you the status of an asset. We regulate you in the following ways, I mean, most of which we have laid down in the white paper. This is the way you shall disclose. This is the way we will control it. We will also collaborate with other countries, like-minded democratic countries, as the Prime Minister said, on ways and means to tackle any potential misuse and have international collaboration, like the way you would have for any other kind of issues that transgress borders. And come out with a mechanism to live with it. I think that should be the ideal way out as things stand today. And of course, once you have the regulation in place, I mean, this needs to be a space where I would say regulation needs to be ever evolving. You can't be sitting and saying, okay, today I draw the line and this is what the regulation will stand for 100 years on crypto. It can't be that way. We might be actually seeing a situation where every month or every quarterly, we might be tweaking something as we discover and realize this is a hole which needed to be plugged and so on.
Right. Mr. Kailasam, as someone, who's interfaced with the government on this issue, and, as you continue to put the industry's thoughts forward, what in your sense are the government's major concerns? Is it consumer protection, or is it the threat of dominance of crypto coins in the financial ecosystem, and thus, this need to classify them as an asset?
That's a great question. It depends. The answer depends on what hat you wear. So if I'm wearing the hat of the regulator like RBI, I would say, oh, this is a currency and there's no control, and therefore I'm concerned. If the government gives the comfort to say, hey, this is not a currency, this is an asset, then RBI would be 50% comforted with that. But then the underlying regulations have to kick in, which means your FEMA and your cash management and the banking system, all of that needs to show some degree of discipline for RBI to be more comforted to say, okay, I finally have something which I can call as reins, and whatever I shake, at least one horse will listen to me out of multiple horses. But then you have the Ministry of Corporate Affairs, which has to also define saying companies can hold crypto, how will they disclose? The accounting standards have to be formulated on how do you value and disclose them in your balance sheet at the end of the year, how they will be, and then the taxation authorities have to clarify on whether it's a stock in trade, it will be a profit and gains from business or profession, or if you are holding it individually, should it be a short-term or a long-term capital gain? How do I get access to the values to decide on what was short-term and what was long-term, and whether the value of capital gain was correctly calculated, so on and so forth. The GST guys would be concerned about whether the platform fees or any platform revenue that is coming in, there's appropriate GST betting charge. If I was SEBI might I mean, we worked as India Tech to open up the startup ecosystem for listing in India after 3 years of effort with the government and SEBI. Now, SEBI has its hands full today with more and more startups beginning to list. Now, is this another animal I would like to own as SEBI? I'm not sure whether SEBI has done its homework or is been there yet. Early days to say that. So SEBI might say, okay, I mean, why are you pushing another exchange to me? This is a different animal altogether. So either you guys decide amongst yourself, either park it in a gift city or park it somewhere else and create something as a model out where a committee of regulators or an interministerial group sitting under one of the regulators can regulate and oversee this, in addition to the self-regulatory organization that may be mandated to put in place to ensure industry has some discipline amongst itself and so on. So there are different ways in which this needs to be looked at. So the answer is not a straightforward one, cannot be, because there are different facets to it.
All right, Mr. Rameesh Kailasam, thank you very much for your time and your thoughts. New technologies should be beneficial. They should widen opportunities and gains for many people versus a few. And, as you pointed out very succinctly, it will require the cooperation of everyone and across geographies, be it regulators, businesses, and investors. And hopefully we can all get there together at the end. So thank you very much, sir, for your time today.
Thank you so much.
Well, that's it from all of us at Crypto TV. I'm Maloni Bhatt, and from all of us, goodbye.